before, as I said, before we get into the meatier stuff, why don't we start with what is your personal background story and your transition into working for Thomvest?
Yeah, absolutely. I've joined Thomvest about 6 years ago, and prior to joining the firm, I started a company out of undergrad, focused not on prop tech, unfortunately, but I was more of a sort of generalized SaaS business targeting customer service organizations, sort of building online tools to allow CS teams to engage with their customers online versus by phone. And ran that business for a few years, eventually sold it and transitioned into management consulting at a firm called ZS Associates. And after some time in working as a management consultant, I got the itch to either start something or explore other opportunities in technology. And in that process of exploration, I got to know the team at Thomvest Ventures, and really gravitated towards them and their approach to investing, which is very research driven and sort of drives a lot of the publishing work I do. It's both to build some recognition and some and get our thoughts out there, but then also just to self-educate and use that research to inform an investment thesis. So that's the general approach of Thomvest, and I really aligned with that from an investment perspective, and I also was attracted by the opportunity to sort of learn how to become an investor, partner with a number of great founders, and so 6+ years later, here I am. It's been a good ride.
Got it. And to be good at your job, especially when you need to, or what you want to, need is the wrong word, but to create these strategy papers, these technology landscapes, you need to be really passionate about it. Because without passion, it's very hard to do such intense research, right? So what is it about the PropTech industry that you are drawn so much? How does it stand out in respect to or vis-a-vis other industries in the market?
Yeah, so we take we've developed this framework internally for assessing verticals that we want to pursue, and we call that the right time, right place framework. And so I think I can get into the mechanics of that framework and how we thought about the opportunity in PropTech, but I guess before doing so, I agree. Like there is sort of a base level of interest or passion that's required in order to both assess an opportunity within a vertical, but then also do the work to get in front of founders and make investments. And so for me, I've always been drawn to real estate. My family has a background in the category, and it's also if you spend some time in the industry, you realize how little technology adoption there's been historically. And I think as a technologist, there's you sort of some of the potential use cases for software are like quite clear, and obviously the challenge is it becomes distribution and adoption, but it just felt like a market that was ripe for change, and something that I personally had interest in as well. So it sort of led us to spending more time from an investment perspective in the category.
Got it. I will ask you to delve a little deeper into the right time, right place framework. But before that, I'm reminded of a conversation with Michael Bremer. He was the CEO of CRE Tech. He was on my podcast just last week, and he mentioned something very contentious, and he said that even though there is a lot of money being pumped into PropTech industry, the adoption of technology is alarmingly slow. It's So money is being pumped, but it's not transitioning into adoption of technology. Do you have any thoughts? Do you agree or do you disagree, being on the VC side of things? What are your thoughts around this comment?
Yeah, it's. I mean, I think it's the fundamental question around real estate technology and some of the venture-backed opportunities within it. It is an industry dominated by operators who become successful in lieu of having access to software or technology, and so you sort of by design are selling into an audience that may have a bit of apprehension when it comes to changing their approach to operating their business and becoming more tech enabled. I think, you know, real estate and PropTech are, you know, PropTech is an umbrella term for so many different business models, and real estate in general is so diverse and diffuse. And so, you know, it really depends on what category or subcategory you're talking about
Right.
within real estate. You know, I think in the single family rental space, like we'll talk about shortly, you know, I'd argue that many of the scale operators today would not have achieved scale without technology. And so, you know, I think from the investor lens, you do have to think critically about the specific category you're investing in, and not only the sort of need for modernization and technology adoption, but the likelihood of it as well, given the base that a potential company is selling into.
Got it. So again, before I come to the right time, right place framework, why don't we understand what are those subcategories where Thomvest is interested in?
Yeah, so we've right now we invest across 4 verticals primarily, and real estate technology is one of them. Financial technology is another, and in some ways there's some close overlap between the two. And we've definitely invested at the intersection of housing and finance. Cybersecurity is another vertical that is near and dear to our hearts, and cloud infrastructure as well. And the way we structure our team here is there is sort of for each vertical, there is a partner that's responsible for leading investments in that vertical, conducting research within the vertical, and sort of owning the soup to nuts investment process there. So we have sort of vertical leadership. And then from an investment standpoint, we are stage agnostic. So once we pick our vertical, we can invest in seed stage companies. We can do growth equity rounds. We have a ton of flexibility from the style of investment that we pursue.
When you said stage agnostic and you said seed, what about pre-seed? Pre-seed is beyond.
Yeah, that's true. We do some pre-seed. I would say the majority of what we tend to do is at the A and B. It's you can think of it as a normal distribution that peaks at the A, and so we do some pre-seed, but I would say it's small relative to what we tend to do.
Got it. Let's now talk about your thesis, right? So what does right time, right place framework mean?
Yeah, so I think this is it's healthy for any vertically focused investor to reassess the verticals that they focus on and invest within on an ongoing basis, just because the nature of technology is changing so rapidly. Like right now, we're sort of in the midst of this potential AI revolution, and everyone is trying to wrap their heads around the AI opportunity across every vertical, including real estate. And so the right place, right time framework is designed to give us sort of a reusable approach to understanding whether a particular vertical is ripe for investment from a venture standpoint. And so, see this, like, let's think of it as this checklist that asks a vertical lead to rate their vertical across a number of dimensions, including things like technology adoption, the strength of incumbents, the the nature of the customer base, for example, willingness to adopt technology based like per our prior discussion, and then right time is really a reflection of are we too late in the cycle? Are we too early? What does the universe of venture-backed startups look like today? What are some trends around venture funding? What are other firms doing in the vertical? And then we tend to conduct dozens of interviews with industry experts and build a more qualitative assessment of a vertical's attractiveness. And then we present those findings to the team, and we use that to get approval for continuing to invest in a given category.
Got it. So out of all the things that you mentioned, I would like to delve into two. Strength of Incumbent. Do you want to explain that a bit?
Yeah. So, I think definitionally a startup is, has to overcome the inertia of incumbent forces as they scale. Unless it's a completely net new category, you're oftentimes going head to head with a much larger, more established, probably more well-funded rival, and you need to outcompete them. And it's oftentimes easier to outcompete an incumbent that has underinvested in R&D, is not considered an innovator, whose product has a low NPS score, versus one who's where the quality of the product offering is quite good. And so when we think about investing in early stage companies, we tend to like it when the strength of incumbents is potentially questionable, or if there's some sort of technology shift that allows upstarts to outcompete incumbents and overcome that initial founding inertia whenever you start a new business. And so that's sort of how we think about strength of incumbents. And I would say in real estate, if you think about the nature of incumbents, it's in mortgage, if you talk to loan officers or just any mortgage professional, they don't love the dominant systems that are used today. In the multifamily category, the largest property management systems are not beloved. I think in the brokerage and agency landscape, there's lots of incumbent systems that I think are beginning to show their age. So it is a category where when we were making the initial assessment in 2018, 2019, it was a category we felt was ripe for disruption.
Got it. So the strength does not come with the size and influence. Strength is often, there could be a new player with disruptive innovations is the term for that, isn't it? And history is replete that there are some really small players that have shaken the foundations of very, very big players.
Yeah, I think the caveat to that, though, is you have to understand switching costs as well. So I think this has been the case in the property management system space. While the
9x better.
Yeah, while the incumbents aren't considered best in class software, the switching costs are massive, and so you haven't really seen a successful challenger really take share from the legacy vendors in the space.
Nice. You also mentioned about the universe of venture-backed startups. Could you shed some light there?
Yeah. So we like I mentioned, we started like seriously taking a look at the PropTech ecosystem in 2018 or 2019, and at that point there had already been several years of prior venture investing into the category. So that's really what we looked at. We said, is this a category that is overinvested, underinvested? Are the most interesting companies at the seed stage? Are they later stage? And we want to be early, but not too early. So it's about finding that just right timing.
Got it. Thank you. let's now talk a little bit about your deals. Like, so what does it take for you? Like, how do you get your deals from? Like, do you run scout programs for yourself to get good deals? Like, what's your strategy like?
Yeah, it's I would say, and this is, I believe, will be consistent with most investors. It's a a multi route approach to finding great companies. Oftentimes building good relationships with fellow investors can be quite helpful, as their companies go out for fundraising. Being top of mind is important in terms of getting introduced to that company. We do a lot of primary research, like the market maps that I've published,
Right.
that informs, that helps us determine which companies are most interesting. And then, oftentimes we'll just do sort of cold outreach um, for companies that aren't in our network yet. And then, I think what's proven to be a really valuable source of deal flow has been within our network of entrepreneurs that we work closely with, that have observed our approach to investing, to portfolio management, whom we've built a strong relationship with, and who act as not only conduits into other great companies, but as strong references on our behalf.
Got it. And just as VCs look for great companies to invest in, companies also look for good VCs, isn't it?
Yes.
It's both sides. So is it also very competitive for the VCs to make a place for themselves, to stand out in the marketplace, to come across as somebody reliable and strategic and strong than other competitors in the market? How does it work out? Like, do you also invest in a lot of marketing yourself and stuff like that?
Yeah, absolutely. I call it a dual sales process. I think we need to get to conviction about a company as a partnership, but simultaneously a founding team needs to get to conviction about Thomvest or myself as a potential partner in the business.
Yeah.
It's a bit cliche, but like these are 10+ year partnerships that resemble marriages in some cases, and so it's not a decision to be taken lightly. And so when we do get to conviction, we spend a lot of time trying to build a relationship and a rapport with companies, and founders, to help them in that decision making process.
Got it. And building a personal brand like yours, like I would not have ever come across you if I had not somehow came across your Medium articles, right? So that also helps, isn't it? Because that's how I know that Nima is a thought leader in his space, and that's how I get trust before approaching you. So that would also be helpful, isn't it?
Yeah, absolutely. I think particularly given the fact that we are so vertically focused,
Right.
Content publishing is a really, I would say, important way to establish a presence in a vertical, and become a part of that community too. I think PropTech is, like I said, it's a catch-all term in some ways, but the industry is pretty tight. And I think my goal when publishing content is to just contribute valuable insights into that community, and without any expectation of an immediate return, but just knowing that's being a member of that community and this is sort of my way of contributing to it.
Got it. So other than the factors that you mentioned about just now about right time, right place framework, what other things that you look for before backing a startup or a team?
Yeah, I think we talk a lot about the quality of founders as the primary metric that we try to optimize for when backing a company. And
What
does
quality mean? Because quality is again very vague. Could you explain that?
Yeah, it's a good question, and I think it's it's a little bit qualitative in nature. I think some of the more measurable aspects or quantitative aspects, I would say, have they successfully founded and sold a company previously? Have they built a team around them that is of high quality? And you can measure high quality as, like understanding their backgrounds, understanding their technical acumen, and sort of understanding their fit within the organization relative to other opportunities they could have taken. And then, I think we talk about this concept of founder product fit.
Yeah.
Is this founder are these founders uniquely positioned to pursue this idea? When they talk about the business, does success feel like an inevitability? And it's very fuzzy, but I think when you have enough of these conversations with founding teams, like it becomes clear when there's when they possess such strong conviction that sort of winning feels like an inevitability. And then I would say, another more qualitative aspect of the assessment is, how do we believe in their ability to bring other strong people into their orbit? I think the key to really building a successful and enduring franchise, and ultimately profitable business, is by bringing great people into the organization. And so, I think of I spend a lot of time with founders discussing their approach to hiring, and I think a lot comes from that conversation, for sure. And then, at the end of the day too, is there, like I mentioned previously, is there a natural rapport between the founders and the Thomvest team that makes us excited about working together for an extended period of time?
And when you say extended period of time, so PropTech, you started at 2018, 2019. It's still early days, right? Primarily, what would be your relationship? Like, when would you look for an exit? What's the time frame there?
Yeah, so I think it's an interesting question, because most venture funds invest on a 5 to 7 year sort of fun timeline and liquidity timeline often. And I think what's becoming clear in real estate is that those timelines, while ideal, aren't necessarily realistic. I think, especially given some of the volatility in real estate markets and the cyclicality associated with real estate, I think a timeline might be a decade plus. A realistic might be a decade plus.
Right.
And so one of the, I would say, the features of our fund, and I failed to mention this earlier, but we are a single LP venture fund. So we have one source of capital, and that's an individual named Peter Thompson, who founded the fund in the late 90s. The nature of our fund structure allows us to sort of go along with companies and not be beholden to a artificially short liquidity timeline.
Nice. That is very reassuring for the founders also, isn't it? That you are for the long run.
Yeah. And there are many examples of companies that where the Thomvest team made investments before I joined, where we're still actively involved with the companies, and I think that's a testament to the model.
Excellent. I think I covered it a bit where I said that there is access to many sources of alternative capital, and are there pressures on VCs to maintain differentiation, attract good deal flows? I think you already mentioned that. But do you want to add something on the current realities of? I mean, it's a dichotomy, right? So while we are in a recessionary climate wherein it's hard to raise capital, but there is also lots of avenues to raise capital, isn't it? So there are two things. So are there? So do you want to shed some light there? What are your thoughts around that?
Yeah, I mean, I think I would say the bar has gotten much higher in
Mm,
the last, and this is across not just real estate tech, not just within our firm, but just sort of across venture generally. Um, the the both the time and required to fundraise, the traction required to and growth required to fundraise successfully, and then the pedigree of the founders has increased, and so I think funds are still actively deploying capital, but just doing so in a much more patient, deliberate way, and maintaining probably a higher standard than they did historically. That's sort of what I observed. But when a company meets all of those requirements and has a great team, is growing quickly, and is in a compelling space, it's highly competitive, and
mm,
you get into, you know, bidding wars and multiple term sheet situations, and
got it.
so those dynamics still persist. Just I would say less frequently than what we observed in sort of the height of the 2021 frenzy.
Got it. So, how's the future looking like for Thomvest? What are the next, say, couple of years looking like? Where is the focus going to be, and stuff like that?
Yeah, so I think the core verticals that I mentioned are still quite important to us as a firm. Um, we are, I would say, like everyone else, we are looking at the opportunities that AI and generative AI present for the verticals we care about. Both thinking about how our existing portfolio companies can adopt AI tooling, but then also sort of net new opportunities that are created. I think in real estate specifically, there are some, like, because so much of the industry is still um, conducted manually or requires human intervention. I think there's lots of opportunities to enhance productivity with agents that sit alongside of a property manager, for instance, or a loan officer. And we're early in understanding how to actually productize those opportunities and then ultimately monetize them. But that's getting us really excited. And so I don't think there will be a sort of meaningful strategy shift for us.
Mm,
And I will say the we're seeing a lot of great entrepreneurial talent that's leaving a a FANG company or a unicorn company,
mm,
starting something
right,
net new. And so I think there's a lot of excitement and energy at the early stages. And
right.
for us, it's about, you know, getting in front of those founders at the right time and
Mm.
understanding their story and vision and aligning, hopefully, in which will ultimately culminate in an investment.
So, do you see a lot of pre-seed startups just mushrooming because there is a lot of talent who
Yeah.
is available in the market?
Yes.
And okay,
Yeah.
got it.
A lot of folks building net new opportunities, which is great. I think that's what the industry is. That's the fuel for the industry, is people, taking the jump and starting something new.
So let's go to the segment one, which is as an investor, Nima, what does a day or a week look like for you? Like how do you structure your day? What's a week for you at Thomvest?
Yeah, it really varies, and I think that's what keeps the job fun and exciting. And I would say it's a tends to be a mix of portfolio facing work. So, it's not just about making new investments in this business. It's about working closely with founders um, and post investment and helping them become successful. And so, a lot of my time is spent working with founders in our portfolio,
So what do you
whether
what do you what do you mean by making them successful? So I know it is value beyond just giving capital, isn't it? So like, do you give them support, outside support? Do you help them network with others? Do you help them, like, how engaged can you be? Because there has to be, you cannot be just micromanaging them also, right? So how do you define a kind of engagement that is healthy?
Yeah, it's a fine balance for sure. I would say the three big areas that I tend to focus on are hiring, um, financing strategy, and within financing strategy, that includes both how to think about their next fundraise and positioning the business effectively for that fundraise, but then also how to think about building financial plans for the company. And that's like an important function of any startup board.
Got it.
And then the third is product strategy. So this is the part where I like to act more as a sounding board versus a micromanager. To your point, where we just stay engaged on how the teams are thinking about product, how the feedback they're getting in market, how that's impacting their product roadmap, and sort of the allocation of resources to product and engineering in order to execute on that roadmap in a timely manner. And I think what I tend to be able to layer on, because I'm in some ways external to the day-to-day operations of the company, is just giving them perspective on what the competitive landscape looks like, what non-customers are saying about the product offering, and just give sort of an external viewpoint on a product that where the founders tend to be heads down in build mode.
Excellent. Well, this brings us to the end of a thought-provoking conversation with Nima. Nima, thank you for your time and sharing with us your wealth of knowledge. And hopefully, maybe when you come up with another landscape of some other segment, we'll be happy and glad to have you again. Thank you so much for your time today, Nima.
Absolutely. I enjoyed it. Thank you.
See you around. Bye-bye.